This is the Sales Gravy Podcast. Hi, I'm Jeb Blunt, best-selling author of Fanatical Prospecting, Objections, Sales EQ, and Inked, and I'm here to help you open more doors, close bigger deals, and rock your commission check. Last Monday, I gave you a tip for selling more at the end of the year by finding unused budget. And this week, I've got another important end of the year sales tip that works really well when you're selling to small and medium-sized businesses. And this tip can help you both open up new opportunities and to get prospects who are putting things off until next year to make a decision. First, though, I want to run something by you. It's really hard to believe that we've been producing the Sales Gravy Podcast continuously for 18 years. We are the longest running and most downloaded sales podcast in the history of podcasting. It's been a really good run, but it's time to shake things up. The one constant piece of feedback that I get from our audience is that you want more podcasts and more content. I was in Brazil just last week speaking at a conference, and our fans there said the same thing. Now, over the past month, we've built a new team here at Sales Gravy that is dedicated to taking this podcast to the next level. We don't have things completely figured out yet, but we know that we are going to add a weekly or bi-weekly call-in show during which you will have the opportunity to ask questions directly of me. And next Monday, I'm going to have more information about how you can sign up for that. We're also going to be producing these Money Monday tips regularly going forward to help you get your week started off on the right fit with a good tip or a tactic that will help you sell more. And now for this week's Money Monday tip, and it's a good one. Because there are only a few weeks left to close business this year, this tactic that I'm about to give you will only work if you act right now. It's important to note that this tactic is targeted at small and medium-sized businesses in the United States. But if you're in another country, keep listening because your tax codes may be similar and this tactic might work for you. In the US, there are millions of small and medium-sized businesses, or SMBs, and the vast majority of these businesses are what we call pass-through organizations for tax purposes. What this means is that the owners or partners in these businesses report the profits that the business makes on their personal tax filings. Unlike big companies, small companies don't have the luxury of rolling profits over to the next year. So whatever they made this year, they have to pay taxes on. And as the calendar winds down, these SMBs are often motivated to invest in products, services, and software solutions in order to reduce their taxable income. In other words, if a business has shown strong profits throughout the year, its owners might be keen to spend some of that money on improving their operations, expanding their capabilities, or streamlining their processes right now, rather than hand over a larger chunk of their money or their profits to Uncle Sam come tax season. Now, some of these business owners are already thinking about this, and some might not be. The ones that are thinking about reducing their tax burden need your professional guidance to get the biggest bang for their bucks, and the ones that are not thinking about it may need your wake-up call to take action now before it's too late. So if you've been looking for a way to hit or exceed your annual quota, to qualify for President's Club, or if you just want a bigger paycheck, it might pay off right now to start focusing on these SMBs in the final weeks of the year. You see, unlike large enterprises with multiple departments and complex accounting strategies, SMB owners are often personally invested in the company's financial results because those results are essentially their income. It's how they pay their mortgage and they put food on their table just like you. For this reason, they watch their revenue and expenses closely. And as the year comes to an end, they're looking at their bottom line and they're trying to figure out how much profit did they actually make. For many of these business owners, this profit is a double-edged sword. And don't get me wrong, they want to make profit. But at some point, too much profit triggers a much higher tax bill. And if there's one thing I know about SMB business owners, it's that they hate paying taxes. They are always looking for ways to legally minimize their tax liability. And one easy and productive way to do this is to make fully or partially depreciable investments in the business before December 31st. Now, this can mean buying new equipment, software, training packages, or services that will not only improve the business long term, but will also reduce taxable income for the current year. Now, as a salesperson, the key takeaway here is that your prospects have a natural time-bound incentive to spend money. And if you can position your product, service, or software as the right investment at the right time, you might find it easier to close those deals that seemed out of reach during the rest of the year. And by the way, if you're dealing with decision makers who are pushing off decisions to next year, this is a great way to get past that objection. I want to be clear, though, that most businesses are not going to spend money for the sake of spending money. Savvy business owners want to reduce taxes and do the right thing for their business. The key word there is and. Therefore, you can't just be transactional. You still must follow the sales process and build a bridge to the value of both tax savings and business improvement when you make your business case. You see, it's all about framing your product or service as a strategic investment rather than a mere expense. For example, if you sell software tools that improve operational efficiency, make the case for how your solution will help them save on labor costs, reduce errors, and streamline workflows. If you're selling advertising, highlight how a year-end launch of a new campaign will lead to immediate results that set the stage for a strong Q1. If you sell capital equipment, walk them through how the new equipment will make them more productive and help them expand their business in the new year. The key is to connect the value of your offering directly to the timing. You see, when you can tie the return on investment of your product to both tangible improvements in the business and the financial perks of year-end spending, the business case you make becomes much more compelling and you will sell more. Now, before jumping in, it's important to understand that while the end-of-year tax incentive is a common denominator, not every SMB is identical. Some might be profitable but cash constrained, while others have capital burning a hole in their pockets. The more you understand the unique challenges and goals of each prospect you're targeting, the better you can tailor your approach. You see, understanding these nuances will help you fine-tune your messaging. For example, if you know a business is tight on cash, emphasize flexible payment plans or financing options. If the business is flush with profit, reinforce the immediate tax advantage and the strategic value of investing those funds. Remember that empathy and relevance are your allies here. Show that you understand their position and that your solution aligns perfectly with their current goals. That personal touch combined with the natural urgency of year-end can give you a powerful recipe for closing the deal. I want to be careful, though, not to sweep under the rug just how important timing and urgency are with this tactic. While you don't want to be completely transactional, you do want to be direct. As we approach the end of the year, many SMB owners have a long to-do list. They're finalizing paperwork, they're doing inventory checks, they're reviewing vendor contracts, preparing holiday promotions, and on and on. They're busy, and they'll have limited time to spend on your sales pitch. This means that your outreach needs to be respectful of their schedule and also clear, direct, and compelling. When you prospect to them, tell them your reason right away. Say, I'm reaching out before the year ends because I have a solution that can help you maximize your tax benefits this year and help you grow your business next year. Being direct and to the point respects their time and sets the context immediately. Now, if you need more help with direct and to the point messaging, go grab your copy of my book, Fanatical Prospecting, and review because statements. It's crucial that you create and maintain a sense of urgency, not the aggressive, pushy kind, but a natural urgency rooted in a real calendar event, the upcoming fiscal year end. You see, the clock is ticking, and if they don't make their purchase by December 31st, they will miss out on the potential tax advantages. This deadline isn't artificial, it's reality. So use it to frame your conversations. Your urgency can help prospects prioritize your offer over their other distractions in their busy schedule. Now, you might still encounter some objections, like we're too busy to consider new solutions right now, or we don't have enough budget. In these cases, it's wise to highlight the cost savings and tax benefits again. Stress that investing now can actually put them in a better position financially, and remind them that waiting until next year could mean missing out on an opportunity to reduce this year's taxable income. If time is an issue, propose a quick and efficient implementation plan. Show them that you can be agile and help them integrate the solution without massive downtime. And if budget is a concern, consider any promotions, discounts, or favorable financing terms that you can offer at the end of the year, because sometimes offering a small year-end incentive can tip the scales in your favor. So let's wrap this up with a quick summary. First, SMBs have a natural incentive to invest before the end of the year. They want to reduce their taxable income and set themselves up for a strong next year. You want to frame your product as a strategic investment. Highlight the value, ROI, and the tax benefits that come with a year-end purchase. You also want to avoid being transactional. Follow the sales process and position yourself as a partner who can help them navigate this critical period. Then you want to tailor your approach to each SMB situation. Research their needs and adjust your prospecting message accordingly, showing empathy and relevance. And finally, create urgency with a real deadline. The calendar itself is your ally. Emphasize that the benefits come from acting before December 31st. Here's the deal though. Do not wait. Start this process now. The low-hanging fruit is out there, but it will rot on the vine if you fail to pick it before the sand runs out on the hourglass of this year. Before we go, I need a quick favor. Please take a moment and give this podcast a 5-star rating or review wherever you listen to your podcast. Your reviews boost our visibility in the search engines, which means other people are going to find us. Then be sure to click follow or subscribe so you don't miss the new episodes that are going to be coming out every single week. And finally, send a link to this podcast to your fellow sales pros and peers. You see, your word of mouth is why we've been around for 18 years, and it's the key to being here for 18 more. I'll see you next time on the Sales Gravy Podcast.